Rate cuts, record market caps, and mega investment deals. This is the week in numbers. 1/4 of a point was the widely expected interest rate cut from the US Federal Reserve. The announcement from Fed Chair Jerome Powell came alongside the release of projections for 2 more quarter percentage point reductions anticipated this year. It indicates officials are now more concerned about weakening growth and small increases in non-farm payrolls.
What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off.
$3 trillion was the market capitalization hit by Google parent Alphabet. It's riding on renewed optimism around AI, plus a favorable antitrust ruling. The company's shares have rallied roughly 1/3 so far this year, the best performer among the so-called Magnificent Seven stocks. $294,000 is what Chinese AI developer DeepSeek said it spent on training its R1 model. That's much lower than figures reported for US rivals. The news is likely to reignite debate over Beijing's place in the race to develop AI. $5 billion is what Nvidia is to invest in Intel, throwing its weight behind the struggling US chipmaker. The deal will make Nvidia one of Intel's largest shareholders, giving it roughly 4% or more of the company after new shares are issued to complete the deal. And $1 billion worth of Tesla shares were bought by CEO Elon Musk, according to a regulatory filing. It prompted the company's shares to gain as much as 7.5% on Monday and reinforces Musk's push for greater control over the company as it races to meet its ambitious targets on robotaxis, AI, and robotics.